Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. Thanks for joining us today. It's going to be an interesting podcast, I think. We've been wanting to get this guest in the show for a little while, and we managed to pin him down, come and have a chat with us. You might have seen him on TV recently. He gets a bit of coverage. He's president of the Real Estate Institute of Australia, or REIA, Malcolm Gunning. Malcolm, how are you going?
I'm well. Good to be over here. Thanks.
It's good to have you. So normally I would do some long-winded preamble to try and give me a segue into what I'm going to talk about on the podcast today, but I'm going to get straight into it today because the environment that we're in right now, and I'm talking politically, we've had a new Prime Minister who's been in the seat now for, I think, probably a couple of months. I can't remember exactly when he came in, but everyone's very aware of the leadership spill. Malcolm Turnbull gone. Our new Prime Minister, Scott Morrison, is in, and he seems to be doing a pretty good job so far. I'm not going to give my opinion on him. This is not a political show on my side. We are pro-property investment here. I don't have any political leaning anyway. But we're entering an election year, and if you're looking at the polls, it's going to be tight. And depending who you speak to, some people think it's going to be a landslide to Labor, whereas your Liberal stalwarts are saying, no, it's not going to be any change at all. Scott Morrison's going to get his term and show us what he can do. So this is the environment that we're working within, and there's many facets to that right across the nation and the economy, from health and education to infrastructure development to defence to security. It's wide. But what I want to chat about today, and something which obviously is for all of us as property investors, is what may happen to property markets and whether or not the current tax structure will stay consistent should the Labor government get in. So where this podcast goes, we're going to be a bit fluid with it. I've got a couple of points I want to cover off. But I'm going to lean on Malcolm to give us insights, and I'm sure he's not going to pull any punches. Malcolm, you ready to go with this?
I am.
So before we get into the political stuff, maybe some misconceptions about the REIA. I think a lot of people think you're the body that supports real estate agents in Australia, but there's a lot more than that. Can you just let our listeners know what you guys do and what your job is?
Sure, Phil. Look, the Real Estate Institute of Australia represents the state institutes, but really it's primarily a lobby organisation and a representative organisation. So our CEO, who's an economist, and we're well documented in a lot of the affordability reports around Australia, including the government. And we give a pretty clear picture of what's going on. Our sponsor there is the Bank of Adelaide, which we're very pleased about. But what we do, we sit in a lot of parliamentary committees. So when our politicians come out with some of these ideas, it's not just they have a brain bubble sometimes. It might seem that way, but you've got behind them is their parliamentary committees. So our CEO's dealing with Treasury when they're talking about tax regime. We do an awful lot with the Attorney General, who's talking about methamphetamines, talking about foreign money laundering, all these sorts of things. So what they do is they bring in industry and say, well, what's the industry's position on that? And the big one was methamphetamines, meth labs in houses. They wanted to bring in a situation where really they were going to hold the agent also responsible for leasing a property that may have had a meth lab in there. We're saying, hang on here, we're not environmental engineers. It's like trying to find out about money laundering. We're not solicitors or accountants. Understand, you can be a real estate agent or a salesperson in New South Wales with about 3 or 4 days of training, so give us a break.
So the REA then very much is, and like other industry associations, if you're not aware how the Canberra system works, it's guys like you who are feeding in information to help support change legislation or policy. That's pretty much what you guys do.
Correct.
Okay, and you guys, the REIA, you're operating on behalf of the Australian homeowner, the Australian investor, and the people that work within the property ecosystem community. So that's your remit, and you want to try and support these people as much as possible to get the best outcome so they can do what they do better than they can.
That's correct, Phil. And it doesn't sound, look, to all your listeners out there, we represent real estate agents too, but real estate agents are very much part of the fabric of any community. And, we're dealing with the whole spectrum of real estate ownership, from tenants through to large investors. And it's difficult. If I went out into the press and start to really advocate and promote what real estate agents do, it falls on deaf ears. But what we do, our role here is to represent the real estate public out there and to be able to give them a voice against often you've got populist opinion about negative gearing and Chinese investment in Australia, my God, the xenophobia that went mad a couple of years ago. But we knew that the Chinese investment into new real estate made up about 8%. And that's just come out. That's just been proven by the Australian National University with a report they're putting out now saying, hang on here, this is popular politics about foreign investment, particularly into residential. Be wary because they've all now withdrawn. That might cause some unemployment in the construction industry. So what we do is try to bring some balance into the argument. Otherwise, you've got politicians, you've got other self-interest groups, and particularly the press, okay, who fly off in all sorts of directions, whether it's talkback radio or the like, or particularly, when you've got tenants unions and that type of thing, they've got a very strong position, but they get very strong voices. And most of the real estate public out there, all your listeners are quiet. It was interesting, Phil, when I did that 7:30 report, and I've got a nickname now, I'm called Two Jobs Malcolm.
Two Jobs, okay.
Anyway, but I got lots of hate mail.
Yeah.
So, and I got our reviews on Google went from 5-star down to about 2. So I got trolled pretty well. But in the community I mix in, the real estate community, I've had person after person say, thank you for saying what it really is. Because your poor listeners out there, they've got mortgages to pay. And if someone says, hang on here, I can't afford to pay the rent because, I go out on Friday night and a good night out in Sydney's not cheap these days. So they expect a fair rent. So you've got, it's an imbalance there. So and if you want to be able to live in these big cities close to the CBD, it's expensive. As I said before, as Joe Hockey said, you either have to have a lot of money or have wealthy parents, okay, or a good job. And unfortunately, this is a worldwide phenomenon. This is called the Manhattan effect that we have in the major 10, we're just out of the top 5 cities in Sydney, for example, and Melbourne and Sydney both in the top 10 cities. So this is the same effect in all these other areas. You want to live close to the CBD of these major business hubs, it's going to be expensive. And we don't pull any punches.
Yeah. Well, it's fortunate that you've probably got quite a friendly audience listening to this rather than some of the naysayers. And go and check out the 7:30 report if you want to have a look at it. It's a lot of the usual debates that you'll see there. And obviously the REIA has a position which is supportive of its member base, its stakeholders. And what I think a lot of people fail to know or they forget about is that every single Australian is inherently connected with real estate in some way or another. They're either an owner of real estate or a renter of real estate. That probably sits within their super fund, big bank shares, and a lot of the value in our banks is driven off very strong residential lending. So everyone's superannuation, everyone is intimately connected with real estate in Australia, and that's a good thing. We're fortunate that we have a pretty healthy and vibrant real estate market. The largest asset class in Australia is residential real estate, so it's where most of us hold our wealth, and that's wealth that can be sold down and spent, or it can be passed on. So we're all inherently connected, but we're in an environment right now, and it's a very contentious topic when we enter an election, well, whether or not it's coming to election year or not, around property and the availability of it, the affordability of it, the socialism around real estate, whether or not it's a right for everyone to actually own their home, or we're going to have a nation of renters, generational nation of renters. But right now the debate is gearing up. It hasn't been announced yet, but we know it's next year around the election, and whether or not negative gearing is going to get punted if the Labor government comes in. So what's the REIA's position on negative gearing, and what do you think is going to happen with it?
Well, 10 days ago I was with our Prime Minister in waiting at the moment, Mr. Shorten, and he welcomed me into which was very foreign ground for REIA. And he said, I suppose you're going to talk to us and tell us why we're shouldn't be bringing negative gearing. And I said, well, I'd like to talk to you about it. He said, I'll make it very clear that's one of our platforms, negative gearing and winding back the capital gains tax. We struggled getting in to see Chris Bowen. He knows what we want to talk about and basically just says, well, the only time I can see you is probably close to Christmas. So they know they're on a winner. Or they think they do. They know they're on a winner at this stage, because a lot of that, in our opinion, a lot of that thinking has come out of the rampant property prices of a couple of years ago. We're in a different market now. When I spoke to our Prime Minister in waiting, I said, you be wary. I said, we've got a silent group of property people out there who are very militant you're not hearing from. It's called the tenants. I said the tenants really, we haven't had, in Sydney and Melbourne, the rental growth's been about between 12 and 13% over the last 5 years. So, and we've got vacancy now, say in Sydney, approaching 3%, which means that the tenants have the upper hand. You know, if you only have to go and talk to one of your ex-Prime Ministers in Mr Keating, who will tell you what happens when you start to turn off investment into real estate. And he looked at me and he said, we're very mindful of it. So our CEO, Jock Kreitlis, is a very good economist. And from his feedback and in his opinion, he thinks that they will take this to the election, but may not wheel it out until potentially late in their first term or potentially a second term. Because they are well aware, the Labor Party have got good economists around them and they've got Treasury advising them. And, so you've got the Banking Royal Commission, which is making credit really tough. So you're going to see vacancies starting to contract and rents start to rise. So, but they're aware of that. The government's very well informed, and really they're tempered by the bureaucrats down there.
So why don't the REA want negative gearing to be removed? Like, why do you think it's essential for the property market in Australia, and what would be the impact if it did go, other than rising rents? Well,
look, it's been well publicised in the past, and you just summarised it, Phil. It's inherent in our DNA here. See, where the imbalance is, you can negative gear in commercial property, you know that. So if you go and buy a $5 million building in a company, you write everything off. Okay, sure, you pay capital gains tax, okay, at the end of it, okay, as you do with any investment property. So why, this is just not on. So you've got mum and dad investors who are going to get nailed because they're passive. Then you've got commercial investors, the big end of town, buying real estate and writing off. Okay, sure, they're paying land tax and all these sorts of other things on the way through. So I just don't think there's got to be an overall look at property taxes at all levels of government. Real estate's taxed at every one of those levels. And our argument is, come on, give us a break. And if we're not against property taxes. We're really not even against potentially, say, a land tax on all real estate. God forbid, that would, the listeners out there would just about die. But if it was reasonable, if those taxes were reasonable and some of the others were extinguished, look, if your listeners out there are upgrading and want to buy a $2 million house, and in Sydney it's a lot of money, but it's not a lot of money, your land tax is extraordinary. Capital gain stamp duty is well over $100,000. So any tax that stands in the way of a decision or hampers supply is a bad tax. And I think that things like negative gearing, capital gains tax, has got to be looked in the totality with the state taxes too. There's too many no's in the troughs at the moment grabbing it, and they're all sort of mucking around poking it and that type of thing. So our argument is, we think if you're going to bring it in, have a good old look at what property taxes mean throughout Australia and try to bring some balance in it. So we're not against property taxes.
What's Labor's debate for removing negative gearing and the simplistic view you get? And they normally dumb it down for people who might not be sophisticated in property investment, but pretty much that negative gearing pushes up prices, which keeps Australians out of houses and means that they can't all fulfil the great Australian dream of a house in the suburbs with a white picket fence, i.e. more people go into the market, which therefore pushes up prices, which stops Australians, owner-occupiers, from buying homes. That's the base argument.
That's correct.
Do you see any merit in that at all?
No, I don't see any merit in it because most of we're talking about residential, primarily residential investment. And a lot of that residential investment is not in millions of dollars worth, big amounts of money. It's in apartments in areas where your listeners are living or or potentially a house maybe in the region somewhere, and they're looking at capital growth to a certain extent. And what it does, it provides supply for the tenancy market, and it doesn't drive up prices because your investor makes up probably of a total market. Look, it did make up 50%, okay, of the total market, thereabouts. But they primarily bought property where they could get some discounts on depreciation and those sorts of things. And also they hold them for a long time. So they're paying taxes all the way through. They're paying council rates and they're paying tax, generally some other taxes. So what we're seeing is that provides that stepping stone for a lot of the public out there to get into the property market. So I think what you do is, if you take the investor out, it's going to be difficult for young people or for the people who only want to rent to be able to do that. If they're going to bring that in, well, then start to build. I talk about affordability. Start to build properties for long-term tenancies. One of the things we've been arguing for a long time is bring in, as they have in Europe, the major investors, the big super funds and the property trusts, build for rent. And there's a lot of debate about that, but they're a little bit concerned about the taxes and not giving any land tax concessions and all these sorts of things. So getting back on, I'm going around your story here, getting back, I think it's all to do with a social issue. I think this is the Labor government have got a social conscience more so than necessarily the right side of politics. And this is a bit about appeasing some of their the left of their party.
And it's not my job to give my opinion on this. I'm just a conduit of discussion. What's your view, though, if the Liberal government remain, if Scott Morrison gets another term, won't get touched, they'll leave it alone, they're quite happy with negative gearing where it is right now?
No, they'll have a tinker at it.
Yeah? What would that tinkering look like, do you think?
They might have a look at capital gains tax.
Okay.
And we've said to them, look, if you're going to have a tinker with capital gains tax, go back to the indexation. Instead of just coming along and saying, well, you get a 50%, you pay 50% of the capital gains tax now. Don't go back to index it. So if you're going to pay it, so index it to CPI, so it grows progressively, so you're not going to get stung in a black and white type of position. It worked before. It was the Liberal government that changed it. Take it back. And then we ripped it into a good friend of ours, Michael Sukkar, who used to be the deputy, I think there's minister assisting Scott Morrison. And we said to him, what a dumb thing you did by taking off the travel discount for people buying properties in the regions. What do you expect people hopping on planes, flying to the Gold Coast, spending a week up there and claiming to be looking at your property? Half the time they go up there and paint the place out.
Yeah.
So, it's just... I think it's popular politics at the moment, and we're of the opinion that, particularly with the way the market is now, we're not sure where it's going to end up. We'll listen to the economists, they all vary, but I think government are going to be a little bit concerned.
Either way, do you think it's going to be at the pointy end of any election rhetoric coming into it from the Labor and Liberal government into next year with the election? Or will it just sit there in the background and be a key point, but it won't be a guiding point? I think it'll be in the background. I think they're going to be very cautious. One thing that both governments are aware of is the groups like us, getting in there and hammering them. I think they'll let it sit in the background and let it percolate along. And it's really one of their rusted-on policies, they're telling us. But there's quite a few others too. Yeah, and the market, you touched on it very briefly, but the market we're in right now, particularly Sydney and Melbourne, it's a softening market, and every market moves in cycles. It's softening now, it'll softening in the future, it'll go up again in the future as well. Your advice, recommendations, views on investors who hold property in Sydney and Melbourne, and is this going to be a long, stormy sort of path moving forward, or do you think it's just going to be a bit of a blip and probably markets will sort of move on? Good question.
I wish I knew completely the answer.
Yeah, no one knows.
But your listeners probably, I'm a 68-year-old man, so I'm a veteran.
And sorry, and by the way, I should have done as a preamble, this is just not some position they've put you in. You've been in real estate for a long time, real estate agent, and you live and breathe real estate. So you're qualified to talk about, I guess,
Phil.
You said that, I wasn't going to say your age, but you can probably talk about a couple of different market cycles. Give us some insights on it.
Well, you get lucky when you hold real estate for a long time. So anyone who comes in and talks to us and says, well, I want to get in a quick hit and get out, and we say, well, good luck. Got taxes and that type of thing. I've been in the game for years and I haven't been able to pick it precisely, the market. But personally at the moment, I'm selling real estate. Is that I think it's a great time to trade real estate. You don't look back and say, my God, I've just dropped 100,000 when I could have got 2 years ago. But it's only relative if you're not going to buy. So in markets like this, the seller loses a bit of momentum, but the purchaser have all the momentum. So it's how well you buy. I think to your listeners' point of view, you put it away, look at the politics and say, the only time it's going to affect you if you're going to sell. And most of us, you don't sell real estate unless you really need to. I think you sell it. When you're 75, that's another 7 years for me. But when you're older and you want to cash out and you might want a bit of money in the bank. But most of us go to my era, our children are going to inherit plenty because we don't sell real estate. We've got clients of ours who've got millions and millions of dollars in property. And I'd say, well, why don't you travel at the front end of the plane? Why don't you spend some money? So why would I do that? I'm working for my children. My children will benefit from it. And so our children of our age will do extremely well. So I think that your listeners out there in most cases will get concerned. Don't look at, providing your gearing is reasonable, don't look at your prices every now and again. Don't sit down and track like you do in the share market how much has gone up and down. Put it away. Listen to your tenant. Don't get miserable with your tenant. Okay, fluctuate a little bit with them. You've got to ride the wave with your tenants too. And you'll be surprised, 5 years' time, 6 years' time, it bounces back very well. Big thing with real estate, the age-old thing is position, and position these days is where there's good transport.
Yeah, and I concur with your points there, Malcolm, and I think a lot of people, if you're trading in real estate, think you're going to get rich overnight. Only very few people actually do well out of that. Most people blow their dough. It's a long-term game, property, and my mantra around this is, where our positioning as a brand is, we try and show some sensibility about it and tell people not to get too carried away with all the noise in the marketplace right now. If you mentioned gearing, so, if you're able to hold your real estate, so it's a cash flow game, it's not hurting you too much to hold real estate. Don't look at your prices every single day, see whether it's going up or down, wait 10 years and then review your prices, and you'll probably see a very different position. So don't get carried away with a lot of the madness going on right now, and a lot of it perpetuated by the media, and it makes good headlines about property decreases because it's inherent to every single Australian property. We live and breathe it. It's everything you talk about at a dinner party or a barbecue, right? But don't get carried away from it. Don't stay the course. Know your numbers, know what you're doing, and making sure that your cash flow position is fine. But, just don't get carried away with it. But that said, it is something which touches every Australian, whether it's in their super funds or because they've got exposure to banks or direct property themselves. It's the biggest asset class in Australia. It's where we hold most of our wealth. But when you consider it, do you feel as though it gets enough political representation in Canberra, but also at a state level? Do you think, the debate is all around property taxes, what you normally hear, but who's looking after, from a government position, Australians' wealth in property?
No one.
So how would the REI see that evolving over time?
A ferocious lobby at really at state and federal level. Real estate is...
And that's your job to do that, do you
correct,
feel?
It is. So what we did with during the Baird government about underquoting, I should say. So what we said with Mike Baird ring me on one Saturday and said, get off my back, you're beating the hell out of us, you're our friends. And I said, look, you're blaming the real estate agents for underquoting. I said, we've got greedy vendors out there. They don't care what you're going to do providing you get a good price. And I said, but it's very difficult to value property in this market. Where we're going to start from, where we're going to go to. We need to improve the education in New South Wales. This was when I was president of REI in New South Wales. And he turned around and he said, you're right. What do you want? And so now you see in New South Wales the education standards been lifted, which gives the agents more skill to be able to accurately be able to really work what prices are in this market. But when it comes to real estate, federally, real estate's a sitting duck. You can't take it anywhere. You can't run away from it. You can't hide it and that sort of thing. And it's taxed at council level, state level and federal level. And so what's got to happen, you've got to look, as I said earlier, if you look at the total taxes, you know, in commercial real estate, I'm sure your listeners out there would know, I was with a client today who's selling a commercial suite in the city. And it's a good one. It's a little, it's only 3 of them in this building. And he said, I'm earning $175,000 a year in rent. And he said, my land tax is $80,000, but it's also $80,000. So what's happened, so you've got land tax now, it makes up in some cases 25 and 30 and 40% of the income.
State revenue.
Revenue. So then you've got capital gains tax and all these sorts of things. So when you stand back, your tax position is really tough and you've got no argument because look at what your property's worth. But your property's not worth $1 until you sell it. But you're still paying all your taxes on what the valuer general deems your land to be worth. And that's the tough thing. So that's why I think that we advocate that we should have a minister for property at federal and at state level with a laser focus that looks to be able to say what's reasonable, be able to balance out. Listen, the Institute would be quite happy to see, do what they did in New Zealand, lift the GST, cut all those taxes out, okay? But that's not going to happen in Australia. That's an absolute no-no from both sides.
Let's not go to GST.
Both sides of the government, but still and all. But these taxes really are a wealth tax.
Yeah, well, what you're pointing out there is that the federal government gets an earn off property, the state government gets an earn off property, upwards of 30% of income. The other income they get is payroll tax, which is another thing, and don't start me on that. And then your local council's getting paid through council rates. So as a property investor, you really are contributing to the health of the nation and giving it the money it needs for it to grow and evolve and protect itself and provide for us and stuff. So, it's an important role to play. And I've got no problem paying tax. I think it's part of what you do as a property investor. But a lot of property investors sit there and think, why? A lot of them think they overpay on tax, right? And with all these different stakeholders who are sort of who are touching at some point. So whether or not I agree with you that we need a dedicated minister for property, I'm going to watch with interest to see how you guys lobby for that. But there is some precedents in that as well, where they've split out particularly parts of portfolios and make it their own. And for example, I think of the defence industry. You used to have a Minister of Defence, but now you have a Minister of Defence Industry as well as part of that portfolio, which looks after the businesses involved in defence space, and the Defence Minister looks after what we're doing with our defence stuff. So there's a precedent for that in some way. So let me know how you go with that. I'll watch with interest.
Well, Angus Taylor currently federally has its Minister for Cities and another in infrastructure and that type of thing. So, but that's a broad portfolio. There's a little bit more than the cities around Australia. There's a few people live in the bush too, in the regional areas. Yeah,
there is, and it's backbone of the nation. They're doing it hard at the moment, the farmers in particular. So, and that's impacting property prices right across the regions, and we'll see how that plays out. But I enjoy that, Malcolm. Thanks for filling us in on what's going on and how you're flying the flag and where you're flying the flag. I know property investors, a lot of them appreciate the work done by bodies and other associations to support them and make sure their best interests are looked after. But if anyone's wants more information on what you guys are doing, or can they speak to someone?
Yeah, sure. Look,
what do they do? Yeah.
Give our CEO a call, Jock Kreitler, or otherwise, and he'll then push it back to me. But understand that the lobby groups within property, the property council, ourselves, the housing industry, we talk.
Yeah.
Okay.
So you guys friends?
Oh yeah.
Yeah.
My
okay.
word.
And you named 3: property council, yourselves, and the housing industry.
Correct.
Property council pretty much looks after people that are within the property game, or
no, big end of town.
Big end of town. Yeah.
So they're primarily property development, the larger trusts.
Yes.
Then you've got the builders, which is the home builders.
Yep.
Okay. So property council picks up the big builders, and we look after the real estate public as such. And so we don't always agree. The property council absolutely against negative gearing, any change of negative gearing. And I was talking to Ken Morrison the other day and said, listen, we're going to need, when they're going to get in, by the look of it. And I said, we're going to have to change our retro. He said, yeah, I agree. So what we do is we don't beat each other up. We don't go in there. So when your listeners hearing us talk, you'll listen to variations, but the property groups get together and have a yarn about what's best for what we think is best for the real estate public out there.
So the property industry, i.e. yourselves and some of the other bodies and people involved in it, feel as though there will be a change of government?
Yes. At this stage,
that's
we
what
do.
You're planning for, okay.
Yeah, at this stage, we do. And so does when I go to some of the larger gatherings where I'm with other industries, you've got to queue up to get to see the Labor Party. And that's a fairly good indication that what they think at this stage. Look, Scott Morrison's really very much, I came from the Shire. I live in the eastern suburbs now, but I came from the Shire. Scott Morrison is a really decent bloke, down to earth, decent fellow, and understands what's going on.
What I've seen so far, it's been good.
And he's smart. But he worked for the Property Council. So with your listeners out there, he comes from a very strong property background. So he's an economist, and he worked as an economist for the Property Council for some years. So he understands real estate at the grassroots level too.
Okay, well, as we run up to election, we'll be covering it. As I said beforehand, we sit right in the middle. We have no politics here at Smart Property Investment. We are pro-investment, pro-investors. So irrespective what happens within an upcoming election and who is sitting in power, as a property investor, you probably can't do a lot. You're not going to influence and change that. You can speak to people who are supporting you, like the REIA, the Property Council, HIA, but you got to concentrate on those things you can control. And what you can control is how you approach property, how you hold your property, your views towards maintaining the cash flow of your property, and the triggers and levers that you have, like buying or selling property. That's what you can control. That's what I'd be concentrating. That's what I concentrate on. I don't beat myself too much on trying to work out what I'm going to do if X-political party comes into play, because just got to roll the punches sometimes. That's why I see it. But stick with property, stay the course, and you'll do well. Malcolm, let's get you back again as well as we get into the election, and you'd probably be a little bit more vocal on how you see some of these policy discussions coming out of either party. We can break them down and see what we think.
Happy to come back, and we're pretty much in touch with what's going on down there, so I'm happy to give your listeners a bit of an insight.
Nice one, good one. Thanks for joining us today, everyone, on the Smart Property Investment Show. If you're not subscribing to our daily morning newsletter, so you're the first to know what's going on in property and politics in property, smartpropertyinvestment.com.au/subscribe. You hopefully checked out the new website. It's absolutely going gangbusters, smartpropertyinvestment.com.au. Go and check it out. And also, for anyone who's tuning in on this, we have all types of guests on the Smart Property Investment Show, from presidents of REIAs through to demographers and property economists and people that work within the game. But we also love to get property investors on the show to talk about how they see the world and what they're doing. Whether you're thinking about investing or you've got a couple of properties or you've got a massive portfolio, get in touch with the team. Let's get you on. Let's have a chat about it. We'd like to cover all stories off. Editor at smartpropertyinvestment.com.au. We'll get in touch and we'll sort that out. Our social media, Smart Property HQ, go and check us out, and we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.